Today, crypto markets struggle to break a 4-day losing streak. Tether takes steps to make it a stable coin more transparent, and a new study says up to 20% of Coinbase listings show signs of insider trading. Welcome to Magnum.Xtrading News. I'm Bryan. Digital currencies are mixed this morning after 4 straight days of losses. Bitcoin fell below $22,000 early Friday, reversing gains spurred by the softer-than-expected U.S. inflation figure released earlier this month. Ether plummeted below $1,800. More downside than 2% from yesterday and far removed from the $2,000 level, perch it was still flirting late Sunday. Merge excitement has tapered off in the recent days. Major altcoins that spent much of Thursday in promising territory also dove downward late in the day, with YGG and OP recently plunging more than 14% and 13%. Popular meme coins, Doge and Shiba, continued their retreat from early week euphoria that sent their prices up double digits, with each recently sinking more than 10%, and XRP dipped to 38 cents. The minutes of the July Federal Reserve's meeting released Wednesday pushed back against the dovish expectations. Early this week, ING analysts said that the financial conditions would likely tighten heading into the Fed's September meeting, implying renewed volatility in risk assets. All right, on to the top stories. First up, crypto investors are still keeping a close eye on the global economy. Inflation is surging in the UK, hitting 10.1%, thanks to the rising food and energy costs. And what's worse, experts think rising costs won't peak until the fall. That could drive the Bank of England to pick up the pace of its interest rate. And here in the US, the Federal Reserve just hinted that it's going to keep raising interest rates despite data showing inflation could be cooling slightly here. In the States, investors feared too many rate increases could push the US into recession, which would spell bad news for risky assets like crypto. Next, Tether is taking steps to make its stablecoin more transparent by working with a new accounting firm. The USDD issuer will use BDO Italia, which will publish monthly reports on the state of Tether's $67 billion in reserves. The decision comes after months of promises from the issuer to be more transparent about its reserve. It also follows regulators and lawmakers around the globe placing new scrutiny on the stablecoin industry after the collapse of Terra USD. Finally, a new study says crypto insider trading may be a bigger issue than previously thought. The research out of the University of Technology of Sydney found that between 10 to 25% of crypto listings on Coinbase showed apparent evidence of systematic insider trading. The study looked at 146 tokens and their price moves on decentralized exchanges 300 hours before Coinbase announced their listings. The study found a run-up in token prices around 250 hours before the announcement. A spokesperson for Coinbase told CNBC, quote, "Coinbase takes allegations of front-running incredibly seriously, and we work hard to ensure all market participants have access to the same information. As part of this effort, we take steps to minimize the possibility of technical signals during asset testing and integration steps. We have zero tolerance for illicit behavior and monitor for its conducting investigations. Where appropriate, Coinbase is currently facing a probe by the Securities and Exchange Commission over the listing process." Okay, that's all for the day, but we are back again tomorrow and we will see you then.